Will the equity markets start dropping now? Well, after suggesting you might want to sell your tech holdings last week, CNBC has new advice for you. Link to my video from last week where I discussed this article in the comments below. So if the equity markets start dropping now as suggested by this new article, what do you think they'll do once they stop dropping? And if they do drop, how will you know when they stop dropping so you can get back in if you follow this headline and sell some or all of your equity holdings? I personally don't believe in these breadth indicators taken by themselves, which is why we developed our own market health indicators over the past 40 years of research. If you look at our bottom dynamics indicators, especially our risk confidence metric, you can see why these breadth indicators might have fallen, as the risk confidence metric was not only falling here, but it went very negative. But now the risk confidence metric is moving up quickly and is positive again, as the bottom confirmation, this blue line, is moving higher along with the market indices, which have been moving higher over the last couple of days. This tells me that those breadth indicators could start improving this coming week if the markets move higher, as I expect to happen. I'm not trying to say bad things about CNBC. You know, they can be a great source of investing information and financial entertainment. But as an individual retail investor or financial advisor who manages money for long-term results, you have to know when to pay attention to these articles on CNBC and when to ignore them, because they're not meant for you. So why are the articles on CNBC often at odds with the best advice for a long-term investor? Well, if we look at the general audience for CNBC, it appears to be fairly broad here. These look like sort of your average, everyday people, if you look at these demographics. But CNBC Pro caters more to professional institutional traders who mainly work at the big firms like Merrill Lynch, Morgan Stanley, Goldman Sachs, and other big institutions. You might not know this, but professional traders aren't judged just on the profits they generate alone. They can be reprimanded or dinged for holding a position too long, even if it's profitable. Does this surprise you? It surprised the heck out of me when I found this out. To me, that doesn't make sense, but then I don't fully understand the business and financial models that drive the businesses of these big institutions. My message to you is this: be careful when you see headlines like these on CNBC Pro. They aren't intended for the average investor or financial advisor and could lead you to hurt your long-term results if you follow their suggested actions. As I've said many times, take the long view and allocate according to your risk tolerance. To learn how to allocate an ideal portfolio using treasuries, consumer staple stocks, and high-growth stocks, watch my 2 videos on the ideal ETF or individual equity portfolios. Links in the pinned comments below. And if you're interested in managing your own portfolio using individual equities, you'll find my most recent video useful. There I discuss how many stocks it takes to diversify an equity portfolio. Link also in the pinned comments below. With that as a preface, let's take a look at what the metrics are telling us now. So if we look at how equities have performed over the past week, you can see, as I indicated in my video last week, I said they were going to go lower, and they did that for almost the first 3 days of the week. But then right at the last minute here, they started moving higher, and some of them finished the week higher. So this is kind of a mixed week here. Started out down and ended the week up, with the NASDAQ up the most, surprisingly, and ARK Innovation moving up very quickly here. So this looks like a really good turnaround situation if this continues into next week, which I think it will. And what if we look back over the past month? Well, if we look back over the past month, again, we have ARK Innovation and small caps finishing the month negative, which is unhealthy. But look at the NASDAQ, yahoo, it's heading higher. And if we look back over the past year, you can see we've had a very healthy upward move, although ARK has really kind of imploded here as of late. But look at the NASDAQ 100. And by the way, what if you had sold some or all of your tech holdings back here, as that CNBC article suggested? You would have missed out on this. So again, take the long view.
I'm afraid
And what about the bottom dynamics? Well, if we take a look here, you can see we've had a very wonky market. You look at the way these bottom forming indicators and the bottom confirmation indicators have just been zigzagging all over the place. They typically don't do this. In fact, I don't remember if I've ever seen this kind of behavior. I'm sure it's somewhere in the past history, but I don't remember it. And the other thing I don't remember seeing is look at the risk confidence. It just plummeted. In fact, this is zero right here, this line, and you can see that it went well south of zero, almost to minus 40%. I don't remember ever seeing that. But now look what's happening. Now what's happening is the market's moving higher, the bottom confirmation signal is moving higher, and the risk confidence is shooting higher and is above zero. So if I look at this alone, just this tells me we're going higher, at least in the early part of next week. Let's see how that plays out. And does that show up here in risk versus opportunity? Well, yeah, kind of. You can see that the risk level, this red line, which is very much a lagging indicator, you can see that it's accelerating downward, which is a very good sign. Risk acceleration, this yellow line, did a knee jerk here and is accelerating down. Now it's kind of leveled off a little here right in the last couple of days. But then you can see that the opportunity level, which was up here at a very healthy level above 80 and the high 70s, is pulled way back and actually started to kind of collapse here, but has flattened over this last day as the market's moved up. So this looks encouraging to me. And what about equity versus safety? Well, if we take a look at equity versus safety, let's just jump into where I kind of map things out for you. If we look at this, you can see this has been crazy. The small caps went from number 1 down to number 9 and down to number 10, while the NASDAQ went up. This is crazy. I mean, these are both fairly risky assets, and one's going up and the other one's going down. And you can look at cash. Cash moved up into first place. Now it's still there, but I'm very encouraged to see the NASDAQ moving up this way. And what about the Dow? The Dow are typically larger, a little bit safer equities. And you can see that while they were moving up back here, which was kind of a risk appetite, but a flight to safer equities, you can see that they've pulled back here to the number 5th position, which I like. I like that this is happening. And what if we look at safety assets? Well, you can see this is a nightmare here. This just looks like a windstorm, a hurricane. This is crazy. But anyway, so you can see cash is up here in the number 1 position. Short-term treasuries are down here in 4th. Intermediates pulled back, but the longer duration treasuries, now they moved up here, but I think that's partly because they were both displaced by IWM and gold moving down. So I'm not sure how much this, and you'll see this when we look at the price movements over the past week. These really didn't move up to get them to move up in the rankings. These moved down and displaced them, and you'll see that later. And how does all of this show up in the buying and selling pressure for equities? Well, you can see that the Dow kind of pulled back here, and just like everything else the end of last week, went higher. And you can see that the buying pressure, the solid gray line, bottomed out here and is now moving higher. What about the S&P 500? Moving up very nicely toward the end of the week, and the buying pressure again moving higher. What about the NASDAQ 100? Well, not only did it move up at the end of last week, but it started moving up way back here as these others were kind of flat topping. So this is looking very healthy. And you can see the buying pressure went above the selling pressure way back here and stayed above and is moving higher again. This looks very healthy to me, and I'm very encouraged going into next week. Now, what about ARK Invest? ARK Invest has been tough. It's been in a downward move with the exception of the end of last week, where you can see started to turn higher here. And the selling pressure, this orange line, has been above, well above, the buying pressure over this entire duration. Now, the buying pressure is starting to move higher. Hopefully this trend continues into next week and this starts to look a little bit more healthy than this. And if we take a look at small caps, very similar picture to ARK Invest. a big downward move here, slight uptick at the end of last week, but you can see that the selling pressure well above the buying pressure, but the buying pressure is moving up. And how are sector rankings looking? Well, if we take a look at sector rankings, remember these are very slow to respond. So last week we had Bitcoin number one, innovation ranked second. We had semiconductors in third. We had treasuries looking very healthy with the longest duration treasuries up here. We had cash way down here, consumer discretionary up here, NASDAQ 100 here. If we move into this week, you can see the NASDAQ has fallen back. ARK and Bitcoin are still up here in the number one and number two positions. And cash is still way down here. So not much movement here in these. But if we look at sector rank acceleration, these move a little more quickly. So you can see that you can see that last week, cash had moved way up here. Consumer discretionary and consumer staples were kind of neck and neck here. And where was the NASDAQ 100? Oh, yeah, NASDAQ 100 way down here. Our ARK Innovation was here, sort of in the middle of the pack. Now, where are we this week? Well, where we are this week, the NASDAQ has moved from here all the way up to here. This looks great. Now, interestingly enough, consumer discretionary and consumer staples have switched places. Consumer staples are ranked a little better than consumer discretionary, but they're both down here at the bottom. But what do we have up here at the top? ARK Innovation. I'm a little confused by this because as you saw from the buying and selling pressure, ARK Innovation has had a really tough downward move over the last couple of weeks. But this metric really includes more than just price movement. So hopefully this is a good indication for ARK. Now cash is all the way up here in the number two spot, and you saw this in equity versus safety where it's in the number one spot. So hopefully this will continue to improve moving forward, just as the NASDAQ went from here to here. So that's a good indication. And what about small caps? IWM, if I could find them. Oh my God, IWM went from here all the way down to here, which lines up with what we saw in equity versus safety. So kind of a mixed up picture here. Now you can see that treasuries went from being healthy with the longest duration treasuries up here. All of a sudden they're down here and the shorter duration treasuries are up here. So this is an unhealthy look for treasuries for now. And speaking of treasuries, this is exactly what I was talking about. So if we look at the price action of treasuries over the past week, you can see that we've had a very unhealthy move here with the longest duration treasuries finishing dead last, TLT 20-year treasuries second to last, and so on. So this is a very unhealthy appetite for treasuries. Now, this could be because the Fed has been making hawkish statements, saying interest rates might have to stay higher for longer. Maybe it's just profit taking because these over the past several weeks are up a lot. They're up with equity type returns, but in a safe haven asset. But that doesn't apply over the last month, as you can see. Again, unhealthy looking appetite for risk in treasuries over the last month. And what about over the last year? Well, you can see what I was just talking about. We've come way up from this bottom here, but now there's a pullback, profit-taking, fear of the Fed. I don't think this is going to last long. I'm hopeful it won't last long and that these will turn around and continue higher. And how does this show up in the buying and selling pressure for treasuries? Well, this also gives me a little glimmer of hope here, and you'll see why. So if we look at short duration treasuries, you can see that the selling pressure is above the buying pressure. The price is declining. Intermediates, selling pressure well above the buying pressure, price declining. What about 7 to 10-year treasuries? Interesting, price is declining, but the buying pressure is starting to move above the selling pressure. This is telling me that buyers are stepping in as this pulls back, and they're buying these. What about 20-year treasuries? Well, again, big price decline, a little bit of an uptick here, but you can see while the selling pressure is still above the buying pressure, there's an uptick here in the buying pressure. Now, if this continues, that should drive this price higher and be good for long-term treasuries. I'm not saying it will, that it'll happen, but if it does happen, this will be a great turnaround, and these could move a lot higher. And what about that yield curve? Well, if we take a look at the yield curve, you can see that the current, the blue line, you can see that longer duration yields have moved higher, which is why these have moved lower. The treasuries themselves have moved lower. So you can see that here. These have moved higher than they were a month ago, and certainly well above where they were a year ago. And you can see that short duration yields have moved a bit higher here. So we're still inverted, a little more inverted than we were last week. I think last week we were about 20 basis points inverted. This week we're 26 basis points. And let's take a look at the Fed rate monitor. Well, the meeting's coming up in not too long, just about 11 days from now. And you can see there's a 97, almost 98% confidence level that the Fed will leave rates exactly where they are. Now, what happens if we look out in March, though? If we look out in March, you can see that confidence level drops to about 53%, and then there's a 46%, call it 47%, because we'll add these two together, likelihood that the Fed will actually lower rates. This one is by 0.25%, and this one is by 0.5%. I doubt the 0.5% will happen, knowing the Fed. And then if we look at May, you can see that it's way more likely that interest rates will be lower by then. There's only a 15% probability that interest rates will be where they are right now. Let's go out to June. You go out to June, that blue bar is almost gone. You know, the likelihood here, based on what the markets think, is that interest rates will be down by at least 0.5% from where they are now. What if we go out to July just for fun? The blue line's gone. So, the markets really think that by July, interest rates are going to be at least 0.5%, if not 0.75% lower than where they are now. I feel like I'm afraid. And what about gold? Well, yeah, going nowhere, as you can see. You know, big rally, drop, big rally, drop. And the buying and selling pressures really not giving you any kind of a tell here. They're just kind of muddling along, trading places as we move forward. So not really much to see here. And what about Bitcoin? Well, we had the huge uptick in buying pressure when the ETFs were all approved by the SEC. And then you can see what the markets did. They bought the rumor and they sold the news. And Bitcoin's been going down pretty much since then. Now, this is going to settle out, and you can see that the buying pressure is moving higher. It's pointing higher as the selling pressure is declining. So hopefully these will continue to trend higher. They should over the long term. I mean, if you think about it, with these ETFs now readily available, you're going to have a lot of large investors putting their money into Bitcoin, or at least a portion of their portfolios into Bitcoin to get some additional non-correlated assets in their portfolio. The equity markets are kind of in a strange place right now. Maybe too many investors read that article on CNBC I referred to earlier. At least it sure looks that way. But I'm encouraged that the NASDAQ 100 has been moving up so nicely over this past week, at least the last part of this past week. And my hope is that that behavior will continue into next week. On the Treasury front, bonds are still showing a very unhealthy risk appetite for longer duration, higher risk Treasury bonds. But I like the fact that the buying pressure is starting to move higher. So hopefully investors are buying this on the dips and the prices will turn around and move higher. Look, if you're going to be a long-term investor, and I highly recommend this approach, then allocate your portfolios according to your risk tolerance and stop rebalancing, or worse yet, selling after big gains. And hold on for the long term, especially if you're managing a taxable account where selling will cost you big time. I discuss how to allocate your portfolios in 2 key videos linked in the pinned comments below, titled The Ideal Portfolio Using Just 2 ETFs or Mutual Funds, and the other video is titled The Ideal Portfolio Using Individual Equities. Again, link in the pinned comments. Until next week, I'm Calvin Rose, And thank you for watching Invest Smarter. That's all for now.
Stay up all night, gotta work now. Make up my mind and it turns around. Say that I'm fine till I burn out. Thinking this money sounded so nice. Ambush here written in the strobe lights. Pay anything for the high price. This life feels like the sunny water. Wet my lips but the salt is stronger. Pour it out if I'm being honest. It's just not everything you promise. Running out, drying out, what did you say? What did you say when I told you? Maybe this wrist wasn't gold proof. Packing my bags like it's all true. Hard to make friends when I'm focused on all these bars that I'm holding. I like the cold but it's lonely, yeah. This life feels like the sunny water.